You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for episode 2 of your bi-weekly options extravaganza, known far and wide, hither and yon, as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Remember, if you like what you hear, keep rating and reviewing on your platform of choice. Really just help the new folks, and they are legion, continue to discover the content. Of course, if you want to go above and beyond, you want to get exclusive content like our great Pro Q&As. Had a great one on Tuesday, as well as, of course, Options Oddities coming up every Friday, as well as great giveaways, as well as live access. Just about everything we do here. Hope you pro folks enjoyed that kind of back of the napkin live stream from Mastermind. I didn't hear it. Hopefully it worked. It wasn't really ideal set up for live. I wanted to give you guys a little live sneak peek, so I kind of just threw the phone on the table and let the dice fall as they may. And hopefully, I think it worked. I think you guys could hear us. Of course, you guys could hear the edited podcast version over there on the network right now, live from that Mastermind event yesterday. Pretty fun. Always nice to have just some live folks around again to get the old live juices flowing again. You guys can check all that out for yourselves. Join future live streams, future Pro Q&As, everything else we do. Get registered for live giveaways and a whole bunch more. theoptionsinsider.com/pro, or for you extra cool kids, you want something extra, /secret club. But that last one, that's a secret. Don't tell anybody. That's just between you and me. Just a secret. And let's see. Hopefully these guys weren't listening because I don't want them knowing about that link as well. Let's see who we've got joining us today. First, let's go out to the dark and stormy shores of Maine. I don't think he was listening, so I think we're safe. He is the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. Hopefully you weren't listening when I mentioned that /secret club part, sir, because that was not for you.
It was not, because I am not part of that secret club. I am an outsider looking in.
You are not allowed to be part of that. See, that's only for the cool kids in the secret club. So if you heard it, just erase it from your brain, hit your head against the wall, so that memory will be gone forever, sir. So there we go. That will be good. And I do believe also joining us in our third chair, once again, the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, are you there, sir? Are you joining us today?
I'm here, but some guy just went and flashed a light in my eye and said, "You'll remember nothing." And I don't remember anything before that, though.
Yes, I forgot we have the Men in Black squad out to enforce the secret club /secret club. Not for you two, only for the cool kids out there. So yeah, you guys work on forgetting that as we work on heading on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we do just that. We watch what the heck is trading out there. And we are seeing a lot of red on ye old screen again. So Mr. Powell and company have once again reinforced a little bit of downside out there in the markets. All of you out there who are holding out hope for that north of 4,000 level in the S&P, maybe you were buying into that last leg of the rally we saw over the last month. These days, back down to probably a more understandable level, all things considered. 37.61 kicking off the show here today, off a little over 20, almost 29 handles in the S&P. Let's see, how low did we go today? This morning we got to about 37.5 before we bounced off there, listeners. We'll see if we retrace that a little bit later in the session today. Of course, that means our friend the S&P off about 0.75%, the Dow off about 1/3%, NASDAQ off about 1.5%. So we're starting to get back within spitting distance, listeners, of those levels. Remember, we were talking about when we did that poll about a month and change ago, and we were saying, where would you guys start nibbling? A lot of you said 3,700 and below. We, of course, got down to the 3,600 level, right around that level last time, and we shall see if we continue to plumb those depths. But we haven't checked in with him in a while. Let's go out to the uncleest of mice, because first off, we can all use a dose of perma-bull optimism in these red markets. And then B, we want to get his thoughts on everything that's been transpiring out here. So Mr. Uncle Mike, let's start. You haven't joined us in a little bit, so let's start there. What were your thoughts on everything we saw this week with the Fed and all that fun? And then what are your thoughts on the continued sell-off we are seeing today, sir?
Well, here's the first thought. Being a bull is tough these days, but being a bill, on the other hand, that is pleasant this year.
I got Josh Allen in my fantasy, so I got nothing but love for the Bills, sir. 40-odd points he's throwing up at a game. Gotta love me.
No kidding. So at least we got that, right? No, I mean, looking at it, we need more medicine, it looks like, from the Fed, in that they were planning on stopping here, but now they're going to go up above 4, which I think people thought they were going to do. So it looks like for now we might get another 150 basis points on the year. And so 275s or maybe 125 basis points, who knows? But whatever it is, I think that they're very bent on stopping inflation is what they want to do right now. And so the thing that concerns me about the government is that oftentimes they get so focused on wanting to fix something that they don't see what else is happening, because right now it's inflation, 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 inflation. That's just the talk, and that's the thing. We need to stop inflation. We need to stop inflation. And yeah, no doubt there's anyone who's bought anything in the last few months knows that inflation is definitely a factor. But at some point, my concern is that I'd like to see the Fed look ahead a little bit, in that do we need to just be so reactive to this, or do maybe we need to take our medicine a little bit and deal with the rising prices a little bit? So I'm not sure. I don't claim to be a Fed policy expert, but what's concerning me is that a lot of times when there's a problem, our government can be very reactionary. And I'm concerned that they might be a little bit too reactionary to this problem. Now, in terms of the market itself, for the long term, I just want to remind everybody that 100% of the time when the market has come down in years past, 100% of the time, whenever we've had any bear market, any downturn in the market, 100% of the time, the market has come back to make new all-time highs. Now, of course, when is the key word to that? And I know I'm leaving that out, but my point is that if you're holding on for the long term, history dictates that long term, the market will come back. Now, with that being said, in the short term, holy cow, we got some concerns here, to say the least. We're down 20%. And so whenever we're down 20% and we're in September, oftentimes it's not very likely that we're going to end the year positive based on historical precedent. Now, does that mean that we can't? No, we could easily end the year at 4,800 and have a great year, and everyone will say, holy cow, that was the craziest year ever. That's very possible. However, the thing that I still want to point out is I'm just looking at just a 3-year chart here, and this is not going to be a technical analysis piece here, but I'm just going back to March of 2020 when we had the COVID news hit the bottom or make the bottom of the market, 21.91. And then we fast forward to January of this year, which is roughly a 20-month period of time. And at that point in time, we're at 48.18. That's more than double in less than 2 years on the S&P 500. So whenever you have a big rally like this, even if it was because of COVID, even if it was because of all of the money all the free money that was being given away and all these high valuations, this, that, and the other, I'm a simple guy. And when the market doubles in that short of a time frame, you're going to have a pullback. And the fact that we're at this 37 in the mid 3700s, it's not exactly an awful place to be, all things considered. Because let's go back to March of 2020, and 3700 was something that not a lot of people were thinking was going to happen. But then it happened by the end of the year. And then from there, we had another huge year in 2021. Now it's 2022. We're getting a little bit of a pullback. That's normal, folks. I don't care what happens or what's going on with the world, this, that, and the other. When the market moves up very quickly, you're going to have some pullbacks. Now, the other thing that I think is very interesting to watch is just the shellacking of the 10-year note. I've been of the school of thought that most of the fear of the Fed raising rates was factored into the 10-year note. Well, they're going to raise them some more, so it got factored in even more with the sell-off that we're having in bonds right now. Now, all I can say for some personal positions is people thought I was crazy when I wanted to hedge my U.S. government treasury positions, and I'm kind of glad I did right now. So I'm pretty happy about that part of it. So we do have that. And then in terms of the commodity world, well, that's always interesting to look at because Powell even said yesterday in his press conference, it does appear that commodity prices have peaked. Well, who knows if he's right or not? And I don't know. I'm guessing he doesn't have a trading account that he looks at, but that is what he's saying anyway. Looking at oil, we are in the low 80s at this stage. So we do have that. We're not over 100, and it has come down pretty significantly off the highs this year. Now, does that mean it's peaked? I have no idea, and I don't think Powell has any idea either. He just said that it's appeared to have peaked. So I don't know if I would necessarily read a lot into that either. And then finally, Bitcoin still sucks. And that is my analysis of the day.
Powell doesn't have a trading account. He doesn't need one. He just borrows Paul Pelosi's whenever he wants to sling some size out.
There you go.
But intriguing stuff.
He does insider trades on stocks. Why would he have a commodity trading account?
That's
he can
true.
Get tips for stocks.
That's true. He doesn't need it. He just goes all in on all stocks, baby. Speaking of all in, our listeners have learned, Mr. Rocklouse, they learned to claim victory early and often. We have in our live chats, Unlimited saying his Packers Bears guess for VIX close on vol views is actually looking pretty good because the score of that game was 27-10. So 27-10, not terrible. So he's claiming victory early, Mr. Meatball. Mr. Rocklouse. So he has learned. He has learned in the VIX game. You claim victory early and often, sir. Speaking of which, I got so busy, I don't think I gave the rundown for the start of the show. So I was so excited to have Uncle Mike back. So let's do that. Obviously, market's selling off right now. We talked about that. VIX cash at about a 27.80 when we kicked off the show. Puts it up about 1.5 points from where it was this time on Monday's show. VVIX at a 91, actually down 1 point from Monday's show. VXX, who knows what the hell it's doing. Today it's at a 19, up about 0.5 point. UVXY at about 11 when we kicked off the show, up about 0.75 point. SVIX 1160, down about 0.5 point from Monday's show. UVIX 1040, down about 0.2 point. And VolQ hanging out at a nice and frothy 33, up about exactly a point from where we were on Monday. All right, Mr. Rock Lobster, what is lighting up your tape this week in a interesting Fed week, sir?
Well, I understand Mike was saying that, hey, the Fed is fighting last year's wars and all the rest of it. But I have, and the market has had a huge rally. We had what was last year's S&P 500, 30%, and the year before was like 11 or 12%. So 2021 was huge. And then 2020 was a pretty big year. I mean, it was up 11 or 15% for the year, something like that. The COVID year. So, Yeah, and those are two huge, net. That's a couple of that's a huge amount, and and right now, and we're kind of back below that level. And to be quite honest, this is where I don't normally disagree with Mike on certain things, but I think the problem right now is clearly fiscal policy in the West is insane. So they're literally all the people running the governments, Democrats, whatever, all crazy people, spending way more money than they're taking. Like, they don't even care. So, and that is giving us inflation if you're in the Milton Friedman camp, which, since he pretty much was never wrong, I am. So just these economies are creating these problems, and somebody has to do something. And the Fed is now doing something. Okay. Now, it's the only thing they can do. The only thing they can do is raise rates to make the cost higher for governments that clearly do not care what they're doing anymore, not doing their job at all, not trying to reconcile expenses. Basically I don't even know what either party does anymore, to be quite honest. I think they all blame, who knows? It's like, it's beyond, it's about my lowest ebb for politics in a long time. So that being aside, somebody's got, they got to start to feel the bite of the money they borrow. They can't keep borrowing for zero and pay zero interest rates. That's all crazy talk. It's always been crazy talk. And the Fed has been on this sort of boomer enabling thing for the last 10 years with QE and all this crap that they think is going to work, right? None of it is sustainable. So at some point, somebody has to draw a line in the sand somehow. And the Fed is now doing it. But I do agree with Mike that, hey, equities are going to get cheaper. And they're pretty low right now. They certainly could get cheaper. They always can get cheaper. They'll probably overshoot. And eventually we'll get used to having a higher interest rate and maybe some balance being brought back into, fiscal expenditure. And, because the government doesn't have a revenue problem. Revenues are still, I believe, breaking records, government revenue. So it's always a spending problem because there's nobody there, and Powell has to be there and do it. So I think Powell has a very difficult job because they also screwed up, I think, big time. They should have been reeling the rates in. And I think not everybody, but many people overreacted to the COVID thing. The Fed, being, you can listen to how people talk about everything. And I know they wanted to keep the economy stimulated while people were out of work, and then people started going back to work, and they didn't undo what they did fast enough. So we're stuck with what we have because that's the hand we've been dealt. Now, what usually happens is all of the froth and the cream comes out of equity prices, and that's kind of where we are. So, you can buy a lot of stocks right now for not very much money. Commodity stocks, they're saying commodity prices have peaked. I don't know if I can agree with that when there's infinite demand for EV vehicles being mandated. So I don't know if that's for sure true, So there are opportunities. You can buy a lot of commodity stocks for cheap prices. You can buy a lot of stocks for cheap prices. I don't think Apple is a particularly cheap company at this level. I actually like Google better than Apple from a relative price point of view. I don't think Tesla's a purchase at this level. It's still too expensive as a stock. That doesn't mean I'm right. I just think it's expensive, and I don't buy crazily priced stocks. So we have basically an equity market that no longer has that easy ramp up that the Fed has provided for 10 years. 10 years of upside vol. And basically, since I started working with Mark at Option Pit, and that's not the trade I had in the 20 prior years, where the Fed just says something and the market rips. We never had that because they kept throwing money at the problem. And I think now we are through the process, and it's a necessary process in my view that we decouple from every Fed announcement every month. It's important for just things to function normally again to some and let kind of the market play out to some degree. And I think we're just stuck in that decoupling. I don't know how far the S&P 500 goes down, and I don't know how high vol goes up. What I will say, though, is VIX has certainly, from a vol plateau, there is not demand for that total. There really isn't demand for that kind of 30 to 45 kind of VIX upside right now. So you look at that and you just say, okay, there isn't demand for it, and so I don't think there's just 3,300. Yeah, okay, we could get to 3,300. Why not? It's not very far away from a statistical point of view. So nothing I'm seeing really is actually, given the condition we're in, is that bad. You're trying to decouple from a decade of being stuck on what the Fed says. And the markets actually react and get to a price pretty fast these days. So are we about where we should be? Probably we'll end up getting a little lower, SPX. And there's plenty of stocks that are a bargain. Are we going to be thrown into massive recession? I mean, I'm not sure about that. The thing that really could put us in a bad recession, I think, is lack of energy supply. Like the problem the Germans have, politicians clearly in this country they're not figuring out that is a catastrophic problem to have no energy. And they're still kind of blundering along on their path to thinking that this is just going to work by some sort of magic, which I don't see how that works. So you have to think, are we going to continue on this path of just, not seeing the forest through the trees from the energy part? That to me would be a major problem. The fact that bonds are 4%, well, hey, all of a sudden the Fed's doing what they need. They're generating some interest in bond buying at a higher rate when they go sell new paper. And all of a sudden a 4% treasury bill probably looks pretty good relative to an equity all of a sudden. So again, this had to be done at some point. And all we are is back to 2008 interest rates. And heck, we had a whole housing melt up when rates were 6.5%. So I don't think anything is as catastrophic as it looks. But politicians could make it worse, right? They could make it worse by making energy disappear, which is what the Germans, and that problem is actually spilling and radiating all the way out, right? They cut the Russian supply off without really thinking about it. Europeans had no energy. And now we're dealing with all these shocks and all these inflationary shocks that I think at this point, our huge amount is just coming from that problem. And it does not look like that problem is going away. They're trying to solve it in real time, but it's pretty hard to come up with enough natural gas to replace what the Russians used to send the Europeans. It's just what it is. So they either they're going to make some deal with the Russians, or we send them more natural gas, or the environmentalists keep getting in the way of all this, of just trying to get energy to people's houses. So, and I don't know where that path will go, but clearly they have not seen the forest through the trees on this issue. And I do agree with TOSAW is the Fed is trying to fight that problem by raising rates. Could they go too far? They could, but I also, they're not really ramping that rate rise up, thinking that maybe this energy thing gets solved in the meantime. And if it does, I think a lot of pricing will come back, somewhat come back to earth. But and I think that's what we have. So we're kind of in this sort of, I would just say, it's been a while since we've had kind of a grinding down market. Let's say 2008, I would say the second half of 2011. The 2020 issue was very short because the Fed always came back in with some sort of a panacea. And I don't think we're going to see a panacea, within the next 3 to 6 months. I don't. So it's just, where do equity prices will have to find their legs under, stock valuations. And that's, we're probably somewhere in the middle here on where we're going to go. So I'm done with my rant as of right now.
Rant police out in force. So we got the optimism of Uncle Mike. We've got the dire pessimism of the Rock Lobster. Where do you fall, listeners? Hit us up. Let us know. You'll see where the markets fall right now, listeners. And we're doing some paper out there, which you probably would expect. This is the kind of day that is a recipe for at least some VIX paper, and looks like for the rest of the indices as well. VIX right now, 343,000 contracts on the tape. The ADV ticking back up almost 400K, 398,000. So it looks like they're probably going to hit that today. SPY, 5.36 million already on the tape for SPY. So that's a pretty aggressive number. The ADV is threatening 8 million of these days, 7.86 million. That's a heck of a lot of paper. The S, 1.83 million contracts already. That's a lot of paper for the S as well. The ADV, about 2.5 million, probably going to hit that today. Small caps, IWM, 653,000 contracts on the tape already. Man, small caps are moving. Let's see. At least they're putting up some numbers. Where are we hanging out? And they're off 2.3% right now for IWM. My goodness, small caps taking a hit. You want to hear more about small caps and everything else, futures, options, stay tuned for TWIFO coming up in exactly an hour from now. I'll be joined by Rich Excel. You guys like when he pops on the show to talk about all sorts of interesting trades, time, Condor, crazy stuff he puts on out there in a bunch of these names. So look forward to see what trades he has in store for us this week. The ADV out there in IWM right now, 856 listeners. And the Qs, 1.7 million. The ADV, 2.7 million. So the Qs looking pretty robust as well. You know what else is looking robust is our most active list. A lot more impressive than Monday's show, listeners. Still not 300K, but looking pretty impressive. 246,000 is what it costs us to get into the top 10 today, listeners. That gets us all the way to the Rock Lobster's favorite. That is, of course, good old Microsoft, trading 240 right now. So actually bucking the trend, up about $1 right now. So Microsoft good for 246,000 contracts on the tape. Number 9, we've got the artist formerly known as Google, now known as Alphabet. We've got Google, 100 exactly out there pretty much as well, up about 90 cents for them. Good for 254,000 contracts. Number 8, this is, if you've listened to Oddities, we talked about this name a few times. This is Luminar Technologies, making it onto our top 10 most actives today. I haven't seen that in quite some time. Ticker symbol LAZR, LAZR, trading $7.50 off, I should say. Nearly $2, about $1.86, nearly 20%. So a rough day for Luminar. And if you know this name, listeners, and you've heard us talk about it, it's just a ton of crazy rolling. That's pretty much what's going on out there today. Like I said, there's 302,000 contracts on the tape. And we've got 30,000 of the 8 puts, 30,000 of the 7.5 puts, 25,000 of the 10.5 calls. There's spreads and rolling just across the board here, listeners. That's pretty much where all this paper is coming from. It's kind of like a charge point in that sense. That some funds have clearly grokked to this name, and they're just rolling aggressively, almost seems like on a daily basis out there. Today, good for 302,000 contracts. Number 7, haven't seen this one in the top 10 in a little bit. This is Ford, 317,000 contracts. Ford looking a little lighter than it was, let's say, a few weeks ago. Like the rest of the market, of course, as well. $12.94 right now, off about a dime out there. We were at, what, a 15 handle not too long ago. Yeah, $15.93 on about a month ago in August. So obviously a far cry from that, down about $4 out there. Well, $3 actually right now. And then we'll see what the future holds here for Ford. Intriguing stuff. 317. I know they can't make some of their stuff fast enough, and other stuff they're having issues with, as with most domestic automobile manufacturers out there. Number 6, the artist formerly known as Facebook. Now they are ye old Meta. I know Brian's been talking about them in his OPR, talking about the drama of Meta out there. So check out OPR if you haven't for his recent take on all this drama. Meta bucking the trend out there as well today, up about $1.30 or nearly 1%, trading right around 143.5. Again, good for 356,000 contracts. Number 5, it's AMD, kind of back to where it usually is hanging out in our top 10 listeners, which is the 4 to 5 spot. Today it's 448,000 contracts. It's off nearly $4 or 5%, trading 70.65 right now for AMD. And then number 4, also kind of back to where it normally is in our top 10 countdown. It's NVIDIA, 476,000 contracts. NVIDIA taking it on the chin today, 125.96, off about 660 or about 5% on the day. So they're coming for NVIDIA today. Number 3, it's the Amazonians. Let's see what the Amazonians are up to. They're up to 529,000 contracts right now, listeners, and they're off about $1.70 or about 1.5%, trading a little bit shy of 117 out there. And then numero due and numero uno, you can probably guess those, listeners. Due, we've got the old fruit company, 1.1 million contracts on the tape. It is selling off about $1.10 or about 0.75%. Still trading 152.60 I'm kind of with the Rock Lobster on this one. I think Apple could certainly use a little bit more lightening of the old load out there before I would be intrigued. Listen, like that long ago, we were talking about, can Apple hit the power strike? It got down to 130. Then they said nope, and they rallied it all the way back up to about 174, and they have clipped it now off about 22 handles from there. But what is your level where you would be intrigued by Apple? I know Uncle Mike hasn't hit that level yet, but hit us up. Let us know what that is, listeners. That means number one, just putting up some numbers these days, is Tesla. Closing in on 2 million contract listeners, 1.85 million contracts on the tape for Tesla. Tesla off about 10, almost 11 handles, about 3.5%, trading 290 right now. Let's see. On the day, got as low as 287 and 3/4 and as high as 301. So it's done a little bit of living today. That's good for nearly 2 million contracts. So Tesla on fire today. In terms of earnings, not exactly on fire, but we do have some names popping off this week. We got AutoZone on Monday. We had General Mills, Leonard Homes, and KB Homes yesterday. Darden Restaurants, Costco, and FedEx today. Let's look at hot off the presses, freshly updated for your convenience, listeners. Earnings move results, and all sorts of other fun reports for you. Let's look at the earnings move results really quickly. Let's go out to Darden Restaurants, the meatball's favorite. Can't get enough of those breadsticks. They were popping off today before the bell. They went into their announcement 131.25. They came into this report 124.71. So they were pricing in 5%, and they moved almost exactly 5%. So pretty much in line. Exactly. Let's go out to KB Homes really quickly as well. They were yesterday after the bell. 28 even is where they went into their announcement. They're pricing in 6.5%. They delivered 3.7%. So a little underperformance. Of course, if you wait through to today's movement, might be more in line. Again, it's all about frame of references out there, listeners. Oh, you know what? You know what else was popping off this morning? Good old MANU, a.k.a. Manchester United, a.k.a. the name that people were alleging that Musk was manipulating with his tweets about buying it not too long ago. A lot of people forgot that it was a publicly traded entity. It popped off today before the bell. They were pricing in 5.2%. It was at 13.5 going into this announcement, by the way. They delivered 1%, so dramatic underperformance. In fact, right now it is back to $13.5. So it is literally unched. So all that Musk-related juice they priced in has just gone away. So no joy for the premium buyers out there in MANU. Costco coming up after the bell today. $4.93 even is where they were trading. They're pricing in 19.25. So again, when we're talking about the upcoming move reports, listeners, those are priced in dollars. 19.25. In the past, they've moved about $9. So they're pricing in a hell of a lot of juice for Costco. That is something. And then FedEx, of course, market mover that they are these days. They're after the bell today as well. 153.25. They're pricing in 622. In the past, they moved $11. So we shall see what we have in store for us after the bell today. But intriguing stuff. Our season, of course, hanging out at 115 right now for the last cycle. We are waiting to re-rack and rerun for the next cycle. Speaking of re-racking, I should say, we've got Darden Restaurants. So Matt and his team loading up on some straddles out here in our earnings trade reports. In particular, it's some 140 straddles, picking up a couple of them here. So check out that earnings trade reports, new long straddles being added to the docket out there, listeners. Speaking of adding things to the docket, let's see what we're adding today. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, it's time to get weird and wild, or at least weirder and wilder than these markets are already. Let's kick things off with Doordash. Haven't gone out here in a little bit. Ticker symbol Dash, of course, DASH. Trading right now $54.5, off about 2 3/4, or nearly 5% on the day. On the year, different story. Obviously, a year ago, my goodness, 217.66. Obviously, Doordash, one of the darlings of the pandemic, up there with Zoom and Peloton. It got up to as high as 257.25 in November. And then they have just come for this thing ever since. The low is right now. In fact, my chart is wrong because it says the low is 54.49, and we are already printing 54.44. So the low is as we speak, listeners out there. So rough times here for Doordash. And it seems like Mr. Rock Lobster, somebody out there is concurring with those tough times and thinks perhaps we may have more to go. So we got a sizable print going up this morning on the put front, in particular the D30 puts. So I said we're at about a 54.5 right now, listeners. Almost 20,000, 19,876 of the D30 puts went up. Paper pretty much lifting the offer for 85 cents. That's a 98 vol. If you are intrigued, listeners, the stock was a little bit higher. It's 55.35 when they went up. The next announcement is on November 3rd, so there will be earnings, obviously, between now and December expiration. So you get at least one cycle baked in there as well. But still, Mr. Rock Lobster, these 30s, my goodness. They are preparing for perhaps a long, hard winter ahead, sir. What say you for the Doordash folks out here?
This is one of those companies that I get why, I get why people were interested in it. I don't see how this model makes money. Has it ever made money? DoorDash? I get it. People want food to be delivered and all that kind of stuff. Just the cost of it overall, it's just never something I remember. And it got to be some crazy price. I don't know. I just see it kind of, I don't know, just going away somehow. So it looks like somebody's buying some puts, and I don't blame them. I don't see how, this is the kind of thing, especially as the economy might get a little rougher, people aren't going to spend the extra money to have food delivered, and it costs a lot to get your food. So anyway, it's just never been a business that I thought was a great, I never thought it was a great business, but I could be totally wrong. Of course, I live in the middle of nowhere, so what do I know?
I was going to say, is there a lot of DoorDash opportunities in the sticks of Maine?
Yeah. And that's the thing. There's no way you'd make any money.
It's for us city folk to do such crazy things. By the way, our chat is disagreeing with you. Our chat says they make a ton of money because they charge $20 to bring coffee to your door.
You know what though? But I think but the margin of the delivery is so expensive. It's not like you're filling up a FedEx truck and, they make 100 package deliveries a day. And those guys, I think the model is a little more difficult to pull off. And I remember in San Francisco, we used to have kind of a product like that where they were delivering, they would deliver movies, food, yogurt, all kinds of stuff. And that it didn't work in the height of the .com boom. And I don't think it's going to work now, but I could be totally wrong. But I don't think it's going to work then either.
It had a brief
as far
shining.
As buying puts go, I think, buy the puts.
Buy the puts. So maybe that's you loading up on those 30 puts. Those are pretty far out there, but if you believe the Rock Lobster, we might have more downside to go here. And yes, they are ridiculously expensive. $20 cup of coffee bringing to your door out there. It's just the start of the fun out there. Let's see what kind of fun we have. This is a newcomer to the Odd Block. Always nice to have a newcomer squeezing its way in there. This is Redwood Trust. Lots of trusts floating around out there, listeners. This one, ticker symbol RWT, trading 641 off about 42 cents or 6.15%. So a rough day here for Redwood Trust. Let's see, on the year, a year ago, they were trading $12.67 a year ago. They got up to their high for the year of about $14.20, close to it, right around November. So pretty much in line with the market. By the way, this is a residential acquisition corporation, one of their subsidiaries, so obviously involved in real estate. And let's see. This one has since sold off pretty hard. It got down to $6.77. That was its previous low for the year. That was on June 16th. And they tried to rally it. It got up to $8.79 on July 28th. And that was all they wrote for. They pretty much sold off again to $7.30 back last week. And now they're selling off again to the new low for the year. It hit $6.30 this morning, and that was the low for the year. So rough times here for RWT. And it seems like, Mr. Rock Lobster, someone's coming out here and saying, you know what, we're not seeing a lot of action anytime soon here for good old RWT. And if they do, they don't mind dumping some stock to the upside, because someone coming in this morning blasting away at 10,000 of the Jan 7/2 getting a whole whopping 15 cents for these listeners. Again, it's not a meme stock, so you're not going to get triple-digit vol for these calls. They got a 38 vol. That amounts to 15 cents. A nickel off the bit, so they got a little bit better. They could have sold them for a dime, so they got a little bit better. The stock was a little lower as well, 6.33, so 15 cents for these bad boys. The next earnings between now and January is on October 26th. So, Mr. Rock Lobster, someone deciding this REIT, this trust ain't going anywhere anytime soon, so they're going to generate a little bit of their own income in the near term, sir. What say you?
I think so. I mean, when you look at these, I mean, it's a very little amount, but 2% when the market, you don't expect the market to do very much, might sound like a lot of money at some point. So I think that's just, I think that's the market that we have with vol so high in general. You probably never even would get a bid for these things under normal circumstances, and 20 cents. And there's some bids out all the way, which is kind of funny. But as of right now, it just, when you have an investment trust and you're selling calls for 15 cents, that's that's not you're not looking at the rosy case scenario anymore.
No, REIT's already not really super sexy, and then now calls for 15 cents. You're not adding a lot of sex appeal to it, but you got to get what you can get. I understand what you're doing. All right, Mr. Rock Lobster, we want to leave some time for Uncle Mike, so I'll let you choose our final victim here. You want to go to Camping World, Magic Software Enterprises, or Robinhood?
Let's go to Hood.
I had a feeling you would go to the Hood.
Yeah.
Let's go to the Hood. Rock Lobster and I heading to the Hood, a.k.a. Robinhood. Haven't delved out there in a little bit. Robinhood right now, 971, off about 21 cents again, or 2%. Obviously well below that 10 handle yet again, but also above the lows. I mean, we got into a 6 handle. So Robinhood not looking the worst it has looked. It was a year ago, 47.84, and it's pretty much looked pretty much straight down ever since. Obviously, it's bounced a few times. That 6 handle hitting it most recently looks like in June. So they have rallied off that level. Obviously, also recently they got up to as high as 11.25 back just a week ago. Actually, they were trading 11.25. So they are coming back for this one again. And what do we find out here in Robinhood today? It looks like Mr. Rock Lobster, someone taking the same approach or similar approach to what we saw in the REIT, but going a little bit closer to home, going out into the weeklies, in particular the September expiring on the 30th, 11.5 calls, which again is close to where we were trading just a week ago in Robinhood, and blasting these away for 33 cents. We saw a block of 3,000 going up this morning, again, for 33 cents. That is an 84 vol still, listeners. So that's a fairly decent vol. Again, far juicier than what you're going to see out there in a REIT. And then we saw another 1,500 block going up, looks like around the same time. Let's see. Yeah, about exactly the same time, for 32 cents. So they sold 4,500 of these things. And as the day has gone on, Mr. Rock Lobster, a total of, get this, 55,000 of these SEP, 55,000 of the SEP 11s have gone up. But we noticed the SEP 11 halves, but clearly there is a palooza on the 11s going up here as well here, listeners. So a lot of fun going on out here in Robinhood, Mr. Rock Lobster. What are your thoughts here on the overwrites here on the 11 halves? And then also apparently a big palooza of the SEP 11s expiring tomorrow, trading today as well, sir. What's catching your eye out there?
Well, I think there was, apparently I saw a note about, and I'm surprised I didn't have it to see in your show notes, but maybe for Friday, that the SEC was going to let payment for order flow stand. Did you see that? I just saw Twitter snippets, which I never believe anything, by the way, so listeners, but Robinhood was up pre-market this morning on that. Not sure if it's true or not. But I got taken out of my stock, on the wheel trade, and I have not got back in. And it does appear that I think somebody took the rally today and sold some calls, and they're probably happy they did, because it was trading 10.5 this morning, something like that, 10.75 pre-market. So it appears to be an overwrite, and then anybody that bought calls is just going to be unhappy, because for right now, Robinhood is going to be an unhappy call purchase.
Looks like some of these 11s actually got up to 31 cents this morning. So yeah, that's going to be a bit of an ouchie for whoever bought those. It looks like they traded about 1,000 times close to it for 31 cents. So yeah, intriguing stuff. Oh no, they traded up to 39, almost 40 cents this morning. So yeah, some good prints for the. Yeah, I'm seeing these reports flying in now as well that the SEC. It's a report. I'll have to go dig in and see if this is true business here. But that is obviously the big cloud. The big cloud's been hanging over Robinhood for a while. That's why I got a little spooked about even selling puts below the 10 handle in Robinhood for this exact reason. Obviously, a huge part of their business model reliant on payment. If that is true, that SEC is not going to yank the rug out from under them, then I could see why some folks would be rallying this thing. But of course, getting caught up in the massive sell-off today. And, we're all caught up in the excitement that he is back. So let's get to a little bit of the old strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
Yeah, it looks like there was a report out of Bloomberg this morning saying the SEC would stop short of banning PFOF, but they haven't stopped short of making some changes that are going to perhaps impact the profitability of that. So there still could be some issues for Robinhood going on. But intriguing stuff. I'll have to dig into that a little bit more to see. But it's time for Uncle Mike to regale us with some options, wit, and or wisdom. Uncle Mike, we've been starving for options, wit, and or wisdom. So feed us, sir. We hunger.
I will do my best. So today I want to talk about something that hopefully in someone's portfolio is a thing right now, and that is your hedges. And so when do you sell your hedge? So let's just oversimplify. You own a stock. You also bought a protective put against it. When do you sell that put for profit? When do you exercise? What the heck do you do with this thing now that you got a profit on a put and you have a loss on the stock? What do you do with this? So two schools of thought on it. Number one, you can sell your put for a profit, or number two, you can ride it out and simply exercise it when it's time. I'm going to give you two scenarios. The first one is a real life scenario. I'm going to change the names to protect the innocent, of course. And this is one to where I got a new client roughly a year ago, and the new client had non-qualified money, which means it was money outside of an IRA. And there was one particular stock in there that had appreciated quite a bit. I hated the stock. I don't know if I hated it. I just didn't know it. So it was not a stock that was in any portfolio or anything that we were doing. But if the client took a capital gain on the stock, it would have royally messed up her tax situation. So I had a long conversation with her accountant, and what we ended up doing on the stock was just collaring it. So we sold a covered call against it, and we bought a protective put on it. Well, that stock has since then taken a royal bath. It is getting killed. So at this stage, where we're at right now, we don't want to take any capital. The client does not want to, and this is part of the plan that we made with the accountant a year ago. We don't want to take any capital gain on the stock this year, or capital loss for that matter. So with that specific stock, the put is worth $1 bajillion and the call is worth like a nickel or something like that. For tax purposes, I'm doing absolutely nothing. And if this stock continues to be at these low levels or goes even lower, whatever the case may be, my plan in this scenario is to exercise the put option come January. And by doing that, we will have a capital gain on the stock because we will have sold it at a higher level, but the capital gain is now long-term. And so from there, we actually are in a situation from a tax standpoint to where it makes sense to exercise the option. We're dictating our rights and using our rights for tax purposes, as well as protecting market risk. Remember, when you own an option, you have the right, but you do not have the obligation to exercise it. And in this case, what our plan is if the stock stays in the tank like this, we're going to be exercising the option come January and then recreating things with that money in her portfolio. She made a nice gain on the stock. The stock got killed, but no issue with it whatsoever because of the fact that we had a put option in place. So that's one school of thought of how to handle a hedge that's going in your favor. Now, the other way with which to do it is that you want to take profit on it. And so let's say that you own a stock, it's way down in value, but your put's way up in value. Well, of course, selling the put could be a way with which to capture some profit from your hedge. If you do absolutely nothing to it and the stock goes up just a little bit, you may have a missed opportunity. Now, whether that's the right thing to do or not in your situation, I have no idea. Everyone's situation is different. However, the second concept that I want to just share with everybody is that, let's say the stock is down in value, but you're like, man, I wish I could buy more of that stock now at this price. I liked it up at 80. I love it now that it's down at 60. Well, great news. If you're in the second scenario, you can buy more stock at that level. What you can do is you can sell the put option for a profit. You can use that profit to buy more of XYZ stock at 60 or whatever the price is, and then you can get your wish. You then lower your cost basis on the stock. Cost basis, of course, based upon where you get in, not for tax purposes. For tax purposes, you'd still have separate cost bases. I don't know if that's a word or not, for the different shares with which you bought. So that's another way with which you can do it. Or you can just sell the put for profit, sell the stock and say, I'm out. I don't like this stock anymore. Time to find something else. So hopefully that can help you if you are trading married puts on stocks. And that is the special Thursday edition of the Strategy Block.
There you go. Uncle Mike, thanks for feeding us all as we keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we check in with our folks, see what they're keeping an eye on until our next show on Monday. We'll also check in on our question of the week really quickly. Right now, we're asking you folks, are we in the middle of an iron condor assance? Strategy was super hot a decade ago, but seems to have cooled in recent years. Is the iron condor making a comeback? And the choices are, yes, I'm trading iron condors, or no, it's not making a comeback because I prefer iron flies, or no, I prefer butterflies, or they never went away. The iron condor has been hot all the time. And right now, exactly 50% of you are saying, yes, we are in the middle of an iron condor assance, and I am trading iron condor. So there you go. And then no, number two, 31.8% saying you prefer butterflies. There is no iron condor assance. Right behind it, we have a tie yet again for third with they never went away and no, I prefer iron flies, both at about 9%. Mr. Rock Lobster, do you think we're in the middle of an iron condor assance? And then B, what are you keeping an eye on until our show on Monday, sir?
You know what? I think the iron condor actually is quite a fine type of trade right now. Normally, I would not say so, but in my view, we've taken that quick upside out of the market, save for Putin, basically given up in the Ukraine, which is possible, and hopefully it is, just for all the suffering that's happened needlessly for it. That would be great. I think that's the only thing that makes this rally, and we still have the reality of the fact that we have all the other issues we have going on, but that would definitely create a shock. So for the most part, I think this is a good iron condor market, relatively manageable without really because we're already down here. So I think it's a manageable trade. So I don't think it's bad at all, given the current condition. And that's what I think about that. As far as what I'm watching, do we kind of break through this 3,700? Do we get a little lower? My sense is just everything kind of gets sad to a point where people stop selling, and they just get used to what we have, and we kind of have what I would call a functioning market again, where it's just, hey, it's news, it's earnings, it's based on fundamentals and not just how much money, how many trillions the government or Fed are going to inject. So I'm looking forward to those days. I want them to be back, but we'll see. So I'm waiting for that.
And Mr. Uncle Mike, same question for you, sir. Do you think we're in an iron condor assance right now? And B, what are you watching until Monday's show?
I lived through the golden age of retail iron condor traders when my days at Options Express, when people would literally call me stupid for not doing them myself right there on the spot. And it was like nothing I've ever seen in my life. In terms of, are we at that level with the retail crowd? I don't see how it's possible to ever get to that level of craziness for people loving the condor. I personally, I can't do, I like them. I like the concept of it, And over the course of the last couple of weeks, I've gotten them up on my screen. I'm like, okay, I want to do this, but I can't pull the trigger on it because if for some reason we do have that snapback, I can't take on that risk. And the bull in me, it just cancels out the bullishness in me. So I can't do it. So from that standpoint, we might be back, but I don't think we're anywhere to the level of where we were the golden age of condors about 12, 13 years ago. In terms of what I'm watching, I'm with Andrew watching the 3,700 level, seeing if we hold that. We're at some key marks right now, again, in terms of where we are, because we're approaching the levels of the close of 2020. So watching to see if we can hold that. The close for 2020 was 3,756. So watching that, we did dip below it briefly earlier this summer. So seeing if that can be held. And then I think the next level of support would be around the 3250 level, which would be the open of 2020. So that is what I am watching.
Yeah, for a lot of our newer listeners, newer traders out, they won't really understand just how hot they were. I don't know what the genesis was, why they were so hot, iron condors. Yeah, about a little over a decade ago was the hot times. Mr. Uncle Mike, any insight into why they were so hot as a retail guy back then? Have at it. And then B, where should folks go if they want to learn more about all things iron condor, tax adjustments, all that fun?
Well, I mean, in terms of the iron condors back in the golden age of the condor, a lot of people got their face a lot of new retail traders came into the market back then. And so that's hence the success of Options Express, Thinkorswim, and all the other retail brokers in that time. But what happened was people would get their faces ripped in buying options, and occasionally they'd win, but most of the time they had that awful feeling. And then all of a sudden, 1 month, they trade these super high probability condors. They do great. And then we had a market to where they worked for about 1 to 2 years. And it was the combination of just this free printing press of money that came in that just spread like wildfire, like nothing I've ever seen among the retail world. And that's where that was. In terms of what you can do to learn more about me, follow me on Twitter at Mike TOSAW. I'll be putting videos out again next week. I just had some family things happening these last couple of weeks, but back to full-time marketing machine again. And if you're looking for a financial advisor who doesn't use them at this point, but at least understands them on iron condors, feel free to reach out to me. Check out my website, stcharleswealth.com.
And Mr. Rock Lobster, same question for you, sir. Where should folks go if they want to learn more about all things pit, sir?
Yes, 888-TRADE-01. Call Ted or other Andrew. You get 10% off. 10% off if you say, hey, I heard you all on this here show. There you go. Something. You get a deal. You get to listen and get a deal at the same time.
I'm going to call specifically just for the other Andrews. I don't want this Andrew. No, keep me away from that Andrew. I want the other Andrew. OptionPit.com, listeners, is the place where you too can go to request the other Andrew. We got to get on out of here. Don't worry. If you're listening live, hang out. We'll be back in a little bit with Rich Excel joining me to break down. Let's see what kind of crazy trades he's got going on in the futures options realm. Will it be more crazy time flies in the ags? Will it be something else? We'll see. We'll have to wait and find out. Coming up on Twiphone a little bit, you'll get that live in your ear holes post haste for all you pro folks, all you folks on demand. Wait a little bit. It'll be hitting the network a little bit later today. Then back again tomorrow, of course, noon Central, 1 p.m. Eastern for vol views. We'll see what's going on in this crazy vol market. Then back again after that for all you pro folks for options oddities. Then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.